that any forecast that's longer than 5 years from now, you could pretty much just completely write it off and assume that it has no informational value, because the world is too random, even from 5 years from now. So you can almost just laugh off anything that someone tells you is going to happen more than 5 years from now.
It's an interesting perspective. I suppose it's based on just what your investment horizon is, because I know I try to look like 10 years out, which is so hard to predict, as you just said. But if I'm not confident in a company for 10 years, how can I be confident in a company for 5 years? I mean, 5 years may not be a long enough period to really know if I'm a good investor or if it's just good or bad luck.
Yeah, I think there's a couple things you can do there with that kind of longer time horizon. One is if you focus on businesses that are least likely to change.
Yep.
It's most likely that something like Coke or Gillette 10 years from now is still going to be in business.
Yeah.
I don't know if maybe their business will be as strong. I mean, it seemed like those were inevitable juggernauts, 10, 20 years ago. But, maybe tastes change and people want less sugar. Maybe you get Dollar Shave Club or Harry's, these like direct-to-consumer brands that can come in and nip at your heels if you're Gillette. The world's always looking for ways to dislodge the juggernaut. And so, I'm not sure there are any like sure 10-year bets like that. I'm a little hesitant to make those kind of approximations, just because I know like capitalism wants to undermine those moats, right? Like that's what they're all working on.
True.
So
So we're looking for companies that can do it themselves, can undermine themselves and disrupt themselves in many ways and innovate out of it. Sorry, go ahead.
Yeah, so that's what Andy Grove from Intel would have said, like the CEO, founder of Intel. You have to be paranoid and disrupt yourself before the competition can. And that came from Clayton Christensen originally, Innovator's Dilemma. But yeah, I don't think the 10-year time horizon is that easy to play. Now, I will caveat that with, if you can find a culture and an ethos of a business where it seems like they will be able to adapt to whatever the conditions change, however they are, and you want to make that bet, I think then you can start to think about 10-year time horizons a little easier, because well, listen, they're smart people, ethical, intelligent, all the things that Buffett would say he's looking for in hiring someone.
Yeah.
They're going to figure out how to solve the problem. Like they're waking up every day trying to figure out how to solve the problem and make your investment worth more. And so I think there is something to be said for that. Like I know that it's very popular to say that, don't bet on horses and not on jockeys, right? Like you want a really strong horse. And I think that is largely true. Like it is easier if you're in a good business to look like a good business person. However, I think maybe with technology, that statement is not as true as it was probably 30 years ago, because things are changing so fast. I think you need to have the good management that's going to adapt. And it's not the nature of the business and the technology of the business and how it solves problems that's going to be the differentiator, because it can get disrupted overnight by something that's coming out of a garage, right?
Yes.
So I find it funny that the longest term horizons are being applied to the tech companies right now, which has historically been where most of the change has happened, right? Like